Hello everyone, welcome back to another FinMeUp Weekly wrap where we cover the most important stock market highlights of both the JSE and the US that happened during the week with some extra insights. So today we'll be talking locally about Mr. Price, Karoooo, Renergen, Foschini Group, Sasol, Astral. And in the US we'll quickly look at Netflix, Microsoft and Tesla. So if you follow any of those companies, this is for you. Mr. Price, so they posted their trading update for the 13 weeks ended 31 December, and their retail sales and other income grew by 34% to 12.4 billion rand. So 34% in retail sales and other income growth. And all the recently acquired businesses, which is quite interesting, so that's Studio 88, Power Fashion and Yappie Chef, achieved double-digit sales growth over the period. So, looks like they made successful acquisitions. What do you think, Paul?
Yeah, I think they made successful acquisitions, Higgo. Just as an investor looking at these numbers, you must be very careful because looking at 34% top line growth, it looks amazing. Any retail will be stoked with those results. But the more important metric is the same store sales. So in other words, what did Mr. Price in Tiger Valley, how did they compare to last year, the results of this year? And looking at those numbers, it doesn't look that great. The growth was mainly driven via these acquisitions, which is great, but same store sales not that great for Mr. Price. And I know I read the investor report, the load shedding had quite a big impact on that. So I would say mixed results.
When it comes to retailers, I really think their operating expenses is increasing with load shedding. The generator costs, installing solar, so definitely has an effect. So if I listen to you, they're struggling with organic growth. The growth that we saw was more acquisitive growth.
100%.
Looking to the next company, and this is a company I own. It's one of my stock picks for the year. If you haven't read those stock picks, it's available on the FinMeUp app. And that is Karoooo Ltd. It's previously known as Cartrack. And obviously they are also listed in the US, so they post quarterly results. And their latest quarter results showed revenue growth of 14%. That's for the subscribers, the total number of subscribers. And it's now over 1.67 million subscribers. So they've got quite a big distribution. And that's also why I love them. They've got the ability to upsell their different products. They recently acquired FinMeUp, which is now Karoooo Logistics, and also they have Karooooo, which is different branches. But because they gather so much data points through their Cartrack business, they're able to, integrate FinMeUp with the rest of their commercial clients, because they have more than 100,000 commercial clients, which shows there's not a lot of concentration risk. But also with Karooooo, collecting the data points on the car, they're able to give, valuable insights, but also when they buy a car, they know at what price they should buy it, and when they sell a car, they know what it's worth. So, that's just a side hustle almost for them. Cartrack is their main business. So their net Cartrack subscribers grew by 27%. So that is, I think it's the biggest quarter ever. They added 78,000 new subscribers in the quarter. That is a lot of people. And the total revenue increased by 29% to 930 million rand. So it's almost a 1 billion rand revenue generating company. So that's proper for a local company, but it's also showing a lot of progression in the international markets. So in Southeast Asia, that is, I listened to many of their investor calls. I'm still guilty. I still need to post that Cartrack updates or Karoooo updates on the FinMeUp app. But I listened to quite a few of their investor calls over the past few quarters and summarized the best of it. And one of the things that stand out is that their CEO is really positive about their potential in Southeast Asia. And they know how to do it. They've done it here. It's not two different markets. It is different. But I mean, if you look at the revenue growth in those areas, it is showing positive. They're also in Europe. So even though they are majority South Africa at the moment, they've got a lot of room for expansion internationally. What do you think, Paul?
100% agree with you, Higgo. I think this is a company with a lot of potential. I think you've covered it quite well. And we have also covered it on the app quite extensively as well. So for everyone listening, go and read Higgo's updates on the app.
Awesome, yeah. And I'll post another one with the highlights of the investor calls with their team and CEO. The next company, a Fin Twitter favorite. Everybody loves talking about this. It's exciting. It's got a lot of potential. It has its risks, and that is Renergen. So they made an announcement that de-risks the project to some extent. So they announced that they started producing their first liquid helium at the Virginia Gas Project, and the helium module is now operational. We interviewed their CEO. We did a Q&A session with them. Some of the questions you asked. So that video is up. We posted it this week. You can check that out for more info on Renergen. Any thoughts on that?
Yeah, obviously, like you said, Higgo, a fan favorite, Fin Twitter favorite. We all love talking about Renergen, and we all love, making money with Renergen because that's what's been happening for us the last couple of years. But from an investor perspective, just be careful. There is a lot of hype about this company, which is great, but that hype is reflected in the share price, of course. So, if they don't deliver, then you're going to be in trouble. And then secondly, the helium module that is now operational, that is great news. Well done, Stefano and team. But it's still on such a small scale. It's like a rubber duck in the bath. So they've now done that successfully. Can they launch the Titanic? We'll have to wait and see.
Yeah, and I mean, the share price currently is driven mainly by news. When they publish an exciting announcement, the share price goes up, and if they don't post anything for a while, then the share price goes down. So it is definitely driven by hype at the moment, but I mean, that's how these early stage companies are. I mean, it's already a big company, over R1 billion, but it's if they execute phase 2 and everything is executed as it seems, this company will be huge, but there's so many risks because we are early. And, this was one of the steps closer to that. I own Renergen, so, it is a risky play for me, so I hope it goes well. Then the Foschini Group, another retailer. So their group retail turnover grew by 17.3% compared to Q3 of the financial year of 2022. So, that looks also good from the first glance. What really caught my eye is the homeware and the furniture retail turnover grew by 110%. So homeware and furniture grew by 110%, the most of any merchandise category. This is quite big. Their turnover exceeded R1 billion during Black Friday and Cyber Monday. So that's some good stats. But what do you think of this retailer, Paul?
I think, in contrast to Mr. Price, the growth we see here is actually organic growth. So I think TFG, amazing results. My brother's wife was actually on the audit team for TFG, so she couldn't tell me while she was auditing what's happening. But now that I see the results, I'm like, yo, she was hiding something special from me. But anyway, so yeah, really good growth. Super excited. I think TFG is the retailer to beat at the moment in South Africa. So well done.
Moving on to the next one, and that is Sasol, another favorite from the Fin Twitter community. I mean, if you bought this in the 2020 lows, you would have made a lot of money. And obviously, the oil prices increased a lot. But anyway, so with oil, there's always a debate, will there be a demand in 20 years from now? But I mean, we are still living in today, and there is a demand at the moment. So they posted some, metrics and an update. So their mining productivity fell by 5%. Sasol will be implementing the first phase of the full potential program at Suiderfontein Colliery. I don't know if I pronounced it correctly. Sasol is also rolling out specific actions to reduce production losses and improve cutting time. Natural gas production fell by 2% due to the power outages and reduced demand. And the Secunda operations production was also 2% lower due to outages and total shutdown. So from first glance, it looks a bit negative. One of our FinMeUp mentors posted a 3-part series with a lot of insights on Sasol on the FinMeUp app, Charles Buerta. I'd really recommend, if you're interested in Sasol, go check out those articles. It has buy arguments, hold arguments, sell arguments, and, a conclusion. But anyway, Paul, what do you think of Sasol?
Yeah, Sasol has been the topic of much debate, Is it a good company? Is it a bad company? A lot of people made a lot of money in COVID times, especially when the oil price was basically negative, if you remember that. But Sasol's main thing is they're struggling with volumes. So that is the main thing that they can control, is their volumes. And as Shaul rightfully mentioned in the stock pick, once again, great stock pick, Shaul, with a shout out to one of our mentors. There's quite a few variables that is at play here. When it comes to valuation. So one of them being, for instance, the exchange rate. That is totally out of their control. So all the oil that they export, that's going to have a massive impact on revenue. The oil price itself, and then the volumes of what they can control, and then three more. So you can read up on that. So that makes it a little bit difficult. If you tweak one of these variables just a little bit, it makes actually quite a big difference in valuation. So that is the thing that we're struggling with. But I think overall, you said Sasol is at, in his opinion, undervalued levels at the moment, between undervalued and fairly valued. So it's a safe play going forward. Should everything, all other things staying constant, ceteris paribus, as they said in economics.
The next one and the final one for the JSE highlights is Astral Foods, and they've been really impacted negatively by load shedding. Their costs increased a lot. It's just horrible for them. I mean, their earnings per share is expected to decrease by no more than 90%. But I mean, even if it's 60%, it's still a massive decrease. And the load shedding just has a massive effect on them. There will always be a demand for what they offer, and that is chicken. There's the prices have been increasing. There's inflation. There's power outages. There's just so many things. What's your thoughts?
Yeah, it's such a sad story because Astral Foods was actually one of the companies that I closely followed for quite a while. Had a few rands invested there as well, and load shedding just took them apart. So it's sad. Hopefully they can recover, but yeah, it's one of those things. What can you do?
Yeah, I think they'll definitely recover if you look at the medium to long term, because corporates are currently investing in solar energy, making sure that they can sort of get off the grid. And then there's the potential that somehow Eskom is fixed, and there's electricity. But the thing is that they have got everything, in terms of poultry, and there will always be a demand for that. So, this is not a company that load shedding won't destroy them. It's just a hiccup. It's a short-term cost. It's a short-term negative thing, but I think long-term, Astral is a great company. It's got a great management. It is currently, in the valuation. You've most of these are priced in. So long-term, I still like Astral. I don't own Astral, but it's a great business. It's just a short-term headwind. Moving on to the US, only going to cover three companies, and those are three well-known companies: Netflix, Microsoft, and Tesla. So firstly, Netflix, the earnings per share of $0.12, missing expectations of 42 cents, revenue of $7.8 billion, which is in line with expectations. They added 7.6 million subscribers globally, above expectations of 4.5 million, so they added more than expected. Their CEO, Reed Hastings, is leaving his role as CEO and will be the executive chairman of Netflix board. And the company believes advertising revenue will be between $3 and $4 billion. So this is a new concept that they are going to bring in. So let's see how they execute. I love Netflix. I use it on a daily basis, but I'm not investing in Netflix. It's just, I believe there's other businesses that's more scalable from here on. They've already got the distribution. They've already got millions and millions of people. How do you go 10x from here? I just can't see it. But, maybe if you're a value play, something for you. Any thoughts?
Yeah, I think, Netflix took a massive beating post-COVID. I think last time I checked, the share price was down about 75%, which is, you're not going to be a very happy shareholder with those kind of results. And they also lost subscribers, which sucks for them, but it's post-COVID. Life is kind of back to normal, and they're having a lot more competition now than they had in COVID time. So that's what happened there. For me, this is mixed results. Earnings per share lower than expected. I think the operational expense is a little bit higher than expected, but they added more subscribers than they thought. So hey, mixed results. I don't think I'll be investing in Netflix, to be honest with you, but I am also a fan of the product. I use Netflix, so hey. For me, the biggest news here is Reed Hastings actually leaving as CEO, because Netflix and Reed Hastings they're like joined at the hip, almost like Steve Jobs and Apple. He kind of built up the company, and I read the book, the No Rules Rules, and I really really enjoyed it. It's like, how do they establish that kind of company culture that Netflix has going on? Super super cool. But as of late, the last year, they didn't have a real good time. So let's see what happens there.
Interesting. Microsoft earnings per share of $2.32, beating expectations of $2.30, so just a slight beat. Revenue of $52.7 billion, so that is just also a slight miss. LinkedIn revenue increased by 10%, up 14% in constant currency. Xbox content and services revenue decreased by 12%, so it looks like less people are using their Xboxes. And the security business passed $20 billion in sales over the last year. CrowdStrike, which is a retail investment favorite for the cybersecurity space, their entire market cap currently is $24 billion. So Microsoft is just a giant, and we use their services every day. Microsoft expects in the third quarter the intelligent cloud sales to be between $21.7 and $22 billion. So, also a big segment. That's cloud is my favorite segment from both Microsoft, Amazon, and Google. Microsoft closed last quarter with 18% more employees than it had in the year prior. So there is layoffs announcements, but they still increased their headcount. And Microsoft Teams now has more than 280 million active users. What do you think?
I'm a massive Microsoft fan. I think this is one of the best companies, the most brilliant companies in the whole wide world, and they've got a one-stop shop. They've got a little bit of everything, and they actually execute on that. So this is a brilliant company. I think the results are okay. It's good. The one area that they could never fire previously has been the search engine for them, and now with the acquisition or the investment in ChatGPT, that can potentially change. And imagine we are using, ChatGPT as our main search engine, then Microsoft will even go, I don't know how much higher they can go, because they're already one of the biggest companies in the world, but that would put them once again on a whole another level. So very excited to see what's going to happen from this.
Yeah, following the AI story and artificial intelligence will be very interesting over the next few years as we see how the giants go after it and who wins it at the end of the day. I think there will be more than one winner, but let's see. Tesla, another crowd favorite, or something that, many people don't like Tesla. Those who've been following me for a while, since 2019, I was very bullish on Tesla. I sold most of my position end of 2021, sold more in early 2022. But I am looking to add more maybe at these positions. Just going to wait a bit more for macro conditions before I pull the trigger. But their earnings per share of $1.19, beating expectations. Revenue of $24.3 billion, also beating expectations. Elon Musk said that thus far in January, they have seen the strongest orders year to date, even in their history. And they are currently seeing orders at almost twice the rate of production. So no demand problem if that is accurate. He also says, this is his words, I was with the Tesla Autopilot AI team until late last night, asking who do we think is close to Tesla for a general solution for self-driving, and we still don't even know really who would be a distant second. So he's very confident in their FSD advantage, and they expect to produce around 1.8 million vehicles in 2023, just below the consensus of 1.9 million. Now, this is a company, they are growing at a massive rate. PE came down a lot. It's now around 40. They've got Elon Musk. Whether you love him or hate him, he is a brilliant businessman. So I'm definitely keeping a very close eye on Tesla. I might nibble a bit at this area, and just see how the macro conditions play out, because once everything starts recovering, inflation is down, interest rates start falling again, then I want to be in Tesla. They've also got massive potential with their energy business, so quite interesting. Any thoughts?
Yeah, everyone's favorite company, Tesla, and most people's favorite CEO as well. I can talk for hours about Tesla, so you're going to have to stop me, but let me just say this. From a risk perspective, My big problem with Tesla is not the insane valuation, because it is insane, let's be honest, but the key person risk. If Elon Musk steps down from Tesla tomorrow, what's going to happen to the share price? That's what I always ask. And I think we're going to see, at least 60, 70%, fall in the share price. And that, I don't like that about the company. But do you see Elon Musk stepping down or something happening to him? I don't think so. I think this is like his baby. This is his main project. This is where everything started for him. So yeah. But then from a valuation perspective, if I ask you today, given these results and looking at the share price, given the tech that Tesla has and the insane valuation, are they overvalued? Are they fairly valued? Or are they undervalued? I have no idea. So what do? Do you buy, sell, or hold? I don't know. I'll leave that for the smart people to decide.
I don't think anybody knows, whether they are undervalued or overvalued, because it's just a different company. It's just a weird company. But that's your personal preference. It has its risks, but it also has its upsides. Same as most companies. Thank you for watching. We do this every week on the FinMeUp app. There's daily highlights. Check out the awesome insights and stock picks and educational content on the app. And remember to play the quiz on a daily basis. There's a person now with a daily streak of 95 days. That is really impressive. That means for 95 days in a row, they played the quiz. Keep it going. Join the community. All the links that you need is in the description. Have a great day and have a great weekend. Cheers.